There we go.
Okay, so welcome to another industry discussion hosted by Open Finance Network Canada. Could we go to the next slide, please? We'll just jump right in today to the discussion. We could go to, yes. Okay, well, I don't need any introduction. I'm not the important one here today. I'm Cindy Zhang, Financial Services Regulatory Lawyer at BLG, Bordellanner Gervais. And I want to thank Open Finance Network of Canada for having me once again to host what I'm sure will be a very lively industry discussion. So the folks that we have that we're very lucky to have join us today on this panel is first Bhupinder Singh. He's a co-founder and CTO at OpenIT UK. OpenIT provides turnkey technology components for faster adoption of open banking and open finance services for fintechs and banks. Bhupinder is also the co-founder and the managing director at Open Finance Network of Canada. He has over 20 years of experience in the information technology industry as a digital identity consultant, strategic planner, and for the last few years, Bhupinder has provided extensive open banking and PSD2 expertise. And I also very privileged to have Brendan Jones joining us, who is a CCO and co-founder of Konsentus. The Konsentus group represents, and you will find this very soon, an unrivaled depth and breadth of subject matter expertise in the creation and the operation of open data frameworks across the world. This expertise is the consistent thread through their two wholly owned but distinct business lines. Konsentus provides award-winning SaaS technology solutions designed to deliver excellence in access control governance for all the participants of open data economies. Customizable to specific market requirements, the Konsentus Open Trust Platform, the OTP, provides all of the tools, reporting, and support services required to implement and operate highly efficient but safe and secure open ecosystems. Secondly, they have Open Banking Exchange, the OBE, which provides specialist consultancy services to guide and enable the creation of open data frameworks by supporting central governance bodies in the definition and the design of market-level programs. OBE also operates highly successful membership programs to enable communities across the globe to help shape and define the future direction of the industry. Once again, we are extremely lucky to have both Bhupinder and Brendan Jones from Konsentus join us today. And first and foremost, we're going to kick off with the substantive piece, the meat of the discussion, which is a presentation from Konsentus and Brendan Jones.
Great, thank you very much, Cindy. I appreciate the introduction and obviously very grateful to be here today. What I'd like to talk about today really is open banking, open finance, open ecosystems and so on, and really look at what are the drivers of success for these open infrastructures. We've got a number of examples I'd just like to go through this afternoon, looking at different countries and so on, and just really making some note about what they've done in the various regions and countries, what's been best practice, and where some of it may have fallen a little short in terms of expectation, in terms of consumer engagement, the number of people who are transacting in these new open ecosystem environments. So the first one I wanted to look at was one that probably everyone on this call will be aware of, which is Europe, which had some payment legislation called the Payment Services Directive 2 implemented. And part of PSD2 was for banks to develop and present APIs whereby third-party providers could access them to deliver all manner of services relating either to account information service provision or indeed payment initiation service provision. And really the directive was a move to say we are no longer going to use screen scraping, whereby consumers would share their credentials with third parties. We're now going to move to a much more secure open ecosystem whereby we would use consent and tokenization to allow access to those services. Within Europe, I think the issue has been that regulation has driven what we now term as open banking in Europe, and regulation really just tells you what to do, not actually how to do it. So what we've seen develop over the last number of years, I would argue, is across the 30 member states of the EU, real market fragmentation in terms of API standards that are being used, in terms of service availability, and so on. And that's meant that actually each state is maturing at a very, very different level. So you can literally grab a map and you can look at the top of the map and look at the Nordics, who've got a very vibrant digital economy with many people engaged. And you come down into Southern Europe and you see there's less usage of these services because people aren't so engaged in digital economy. Maybe the banking infrastructure is not as up to date as we see in the Nordics and so on. But what it means is that fragmentation is there. It's meant that as a third party, if I want to access a bank's interface, there's a multitude of potential APIs that I need to integrate with, which drives complexity and cost into the ecosystem. And it's meant that services have not necessarily matured at a rate that we would like to see. I think also within Europe, we suffer to a degree from the fact that the scope of the regulation was very narrow. It was really centered only upon transacting bank accounts, so really sort of debit type accounts that were available via an online interface. So you couldn't get at savings account information or other types of accounts. So again, very narrow. So that really narrows the types of services that can be brought to market, and to a degree, to date, has stifled innovation within the market. And I would contest that the majority of this has been because actually regulation was written at an interbank level. It wasn't written at a level thinking about consumers and how they would interact with the services and so on. So we've seen this lack of adoption. We've seen a massive rise of third parties who are regulated to operate within Europe. There's currently, at last count, 353. But they're very narrow in what they offer. They can operate in multiple jurisdictions if they're regulated to do so. But really, I would say that we're at the start of a journey within Europe, even though we've been going since 14th of September 2019, and we still have a long way to go. I think you have to be careful what you wish for as well. So regulators tend to catch up with the market. Regulators don't drive innovation. So with the implementation of PSD2, there has been a lot of talk in the market about certain services have had to withdraw functionality and so on because it was outside the scope of the regulation. So actually, some service providers have taken a step backwards, not a step forwards and so on. And we just recently had a review in Europe, middle of last year. Part of the provision of the regulation was a review after a period of time. And a whole heap of issues have been brought to the fore, have been reported to the EU Commission. And now the EU Commission needs to decide actually how are we going to move this forward. Do we move to another piece of regulation, which is called PSD3? We've already got a complex piece of data privacy regulation in Europe called the GDPR. SPAA is open finance for payments within Europe. How does that interplay with all the other pieces of regulation? So regulation driving open banking has its place, but has it been successful thus far? I would argue probably not. And there's still many, many issues in the UK market, in the European market that need to be resolved in order for open banking to really flourish and then move into broader service provision under open finance and then ultimately under open data systems. So quick snapshot there. If I compare that now, say, to the United Kingdom, even though the UK was part of Europe at the time that PSD2 was enacted and PSD2 was enshrined in UK legislation, in the UK, we took a completely different approach to Europe in open banking. Primarily, our open banking journey was actually driven by a competition and market authority order, which had seen that the largest 9 banks in the United Kingdom had undue dominance, and the regulator wanted to break that dominance and drive competition within the market. Therefore, it put in place a banking order, which required the top 9 banks to fund a central entity, which is known in the United Kingdom as the Open Banking Implementation Entity, OBIE, to start to take a more centralized approach, very different from Europe, to look to develop standards, processes and procedures, and also conformance, whereby anyone who wanted to operate in the UK system and wanted to adhere to the UK open banking standards could do so. And it started to remove out a whole degree of complexity that we've seen actually been imposed within Europe because of the way the regulation had been enacted. UK, like Europe, had a very narrow definition, so it only looked at personal, what we call checking accounts and business checking accounts. So again, you could argue that an inhibitor for long-term innovation in an open economy and so on. But having a central entity that basically took a scheme approach to open banking opposed to letting banks do their own thing definitely provided benefits with things such as standardisation. Standardisation, for example, of API specifications, conformance testing, customer experience guidelines, operational guidelines. You know, we all know that if we join a scheme, there's a baseline, and the baseline tends to be the regulation, but the scheme then delivers the other layers on top of that to allow for the participants of the ecosystem to interact and to cooperate with each other under a standard set of rules and procedures. That has most definitely accelerated the UK open banking market. Now, could you claim that the UK market has been successful thus far? I would argue that Rome wasn't built in a day. And if you look at all payment systems in their early stages, they struggle to get adoption. But once people understand them and familiar with them, are comfortable with them, they start to engage with them a lot more. And, you know, you can even take that from, I'm of an age, sadly, where even plastic cards in wallets were a new thing back in the 70s. Okay, cash was king. We've now moved out of that, and people are now more happy to use other alternative payment methods like cards and so on. The UK was very different to Europe in terms of everything in open banking in the UK was use case driven. So it was thinking about the consumer and the end user. And that meant that providers were able to deliver much more consistent user journeys, which was great because it helped to remove friction out of the user journey and so on. But where we stand today in the UK, we've got, I think it's 6.5 million people who engage on a monthly basis with open banking services. So that's roughly 13% of the UK population. For the top 9 banks, there's just over 1 billion transactions a month that are being processed and so on. But it's taken 5 years to get to that point. Now, the interesting thing I'd just like to highlight here is I can quote you actual statistics for the UK. I can't quote you any factual statistics for Europe. Because by not taking a centralized approach, by not having a central monitoring service, system, regulator, whatever it may be, anybody who quotes facts and figures for the European market is always speculating, because there is no quantitative evidence to be able to support that, because no one collects and reports that sort of information, whereas in the UK they do. So we have a different system. We have a centrally managed system. It's a scheme-based approach. We've got 1 billion transactions being transacted a month now by the top 9 banks. If you extrapolate that out, that's going to be probably about just under 1.2 billion transactions a month and slowly growing. Of that, 99% of those transactions are account-based information transactions. Payment initiation, open banking payments are still in the UK very much in their embryonic form. Only about 7.5 million transactions a month being conducted. So that's under 1% of the total volume of transactions. So that just tells you it's still got a way to go. And there was an interesting report, funny enough, published in the last 48 hours, and I took a note of it. And it states that in the UK today, even 84% of Britons do not trust open banking. and that 72% of consumers believe that open banking actually does not benefit them, which is the whole reason why we built it in the first place. So we've actually not got messages across. And 50% of them actually believe it's the third parties that benefit more than they do. So it's a problem. I've been involved in open banking for 8 years. I've always been an advocate, and I've always screamed education, education, education. And nobody has done it thus far to consumers and to businesses. And I don't mean education about open banking. I mean, because open banking is just another set of payment rails, another set of rails to get data. I mean, education of consumers and businesses as to the benefits that an open economy will deliver to them. The benefits of engaging in a secure open economy, whereby their data is only shared with their explicit consent and only used in a proportionate manner for which they have agreed. And until that message comes across, then I think there's always going to be barriers in every country where we implement open banking. Because let's not forget, banks have told everyone for the last 30 years, do not share your credentials. Okay, your credentials are you. And we're now allowing people to access their accounts and get their data. So it's diametrically opposed to what they've always been told in the past. So a process of education is always required.
Brendan, can I ask you a question on that very point?
Please.
So Open Finance Network, as it's pre-existed as Open Banking Initiative Canada, for the past 3 years I've seen and helped them with a lot of material that are intended to be consumer facing and digestible logos and pictograms and stats to the extent that we can rely on them about the benefits to consumers and SMEs. I'm wondering if the UK is having a similar issue, particularly since it's been adopted or there's more of a structured ecosystem and consumers are still feeling this way. What do you think are some of the solutions? Should the messaging come from a different entity? Should the banks take a role in it, educating consumers and changing their view?
If I can be so bold,
please.
If I wanted to see open ecosystems flourish, I would take a scheme/brand-based approach, whereby I would communicate as a brand to the market about the benefits of the services that are being delivered and the security around those services and the confidence that those users can have engaging in their services, that A, their information would only be given with their explicit legal consent, and B, that information would only be used in an appropriate and proportionate manner for which they had granted that access. One of the problems in the UK, even though it was use case driven, in my view, was we had a whole group of exponents, and the UK was brilliant. It brought together all the stakeholders. In Europe, that was never the case. It was just pure regulation. We brought together all the stakeholders into the Open Banking Implementation Institute, and believe me, the number of meetings that played to hundreds different stakeholder groups and so on. But it was always a group of industry practitioners who understood banking, payments and data systems. It wasn't your average consumer in the street, and those messages need to be very, very clearly tailored. Now, this may not be relevant, but it's a good example. Back in my earlier days, when we moved from using magnetic stripe cards for payments, moving to putting chip on card and using
that machine.
And then we moved to chip and pin. There was a huge industry education exercise that went on over a 12 to 18 month period to educate people about the change. And that's where I feel these things are missing at the moment.
And who educated those people in the 12 to 18 months?
So in the UK, it was actually driven then by a company called APAX, the Association of Payment and Clearing Services. So it was a trade body that represented all the financial institutions. And they all paid into that to be able to educate customers and incentivize them and so on. One of the problems I think we have here today, though, is the reason they invested in that investment was because they didn't want to see consumers stop using cards, so it was in their interest. Banks have been forced to put APIs in place, and to me, one of the big issues.
Make sure that I am on mute. No, there's
one of the big issues with open banking today is that
banking meetup.
the incentivization is unbalanced, because banks have had to open up their APIs to allow third parties to get data, and third parties get that data free of charge. What's the incentive for the bank? There isn't an incentive for the bank. And you need to have a remuneration model in place which incentivise all the stakeholders to invest in technology.
This is really interesting point, Brendan. I know you have a presentation, but I think I do want to ask that question, because a question came through the chat when you were talking about schemes, and now you're talking about the incentivization model. And I do think we've never had a speaker touch on those two aspects. Could you elaborate on both those things? Yes, I've been to like all 13 of these.
So what would you like me to elaborate? So to me, open banking should be a scheme. It's not about regulation. Regulation should be sort of the baseline foundation. And I'd argue regulation should be very light touch. Regulation should be in place to say who can participate in the scheme and who can't. But regulation just tells you what you have to do. It doesn't write the rules about how you do it. It doesn't write the rules about how people interact with each other. Everyone looks at open banking and says, it cites when things are working well, but what about when things aren't working well? How do you remediate when people have issues? Phone up their banks or third parties. You know, everyone on this call, I have without a doubt, will have a plastic card in their purse or their wallet. Yeah, that is covered by a set of scheme rules that cover how all the entities interact with each other, what the rules are when things go right, what the rules are when things go wrong. And actually, you know, we all have on those cards a little decal bug, you know, either one of the card schemes or whomever, that gives us confidence that we know there's something there that governs the use of this piece of plastic when I go to a merchant or I go online and I decide to make purchases. And open banking, I don't believe, should be any different to that. Open banking should have a whole set of rules around it that all players within the ecosystem sign up to, so they understand the rules of the game, for want of a better expression. They understand how to play. If you have a set of rules, then you tend to have standards. So if you have standards, everyone develops to the same standards. So you reduce the cost of development and complexity in the ecosystem. I would also argue you expedite speed to market, because again, you're standardizing. You develop conformance tools, for example, to everyone to test against before they launch into a live production environment. And then you have things such as dispute resolution systems in place that when things aren't going right, people have recourse to be able to go and complain and be able to have those complaints heard and hopefully remediated in a meaningful period.
I understand I completely agree that regulation should not be written in laws should not be written in a way like they're typically written that in a way that's technologically agnostic, right? They're not, their role is not to set standards. They're not the market experts, drafters and politicians and so on. But when you talk about who, like, there needs to be a set of standards and rules. My question is, who would set those standards and rules, and how do we, and do you think that it should be followed on a voluntary basis? That's what we have in Canada. We just finished, CIO Strategy Council just finished that open finance standard, technical standards document, but it's voluntary. Or do you think that part of the scheme, it's more so folks that want to, offer these services have to be accredited and be a part of the scheme? And then again, that sounds like, does the scheme-based model look like there is a quasi-regulator overseeing this?
So I think what we're seeing start to develop around the world is a central entity that will act as a scheme administrator, okay, who will write the rules that people sign up to because they want to be part of the team, if you so to speak. And what I'm tending to see happen is that Open banking is initially being driven by, for example, central banks and regulators. But as we've seen in Brazil, an entity now exists that's not part of the central bank, but no doubt overseen by the central bank, who now writes the rules and oversees the ecosystem. Because we're talking about an ecosystem here, and I would suggest that if you have those rules and standards in place that everyone adheres to, you move towards incentivization of all participants within the ecosystem, because you don't just want banks to put APIs in place, you want them to invest in this market space as well. Why can't a bank, for example, get the data held by a third-party provider? They have to give the third-party provider the data that's held, that they hold on behalf of a customer, but that third party could be holding data that's valuable to the bank in terms of its service proposition as well. So it's about developing that level playing field that everyone can coalesce and cooperate in with a standard set of rules, and you then get standardized levels of service offering definition and everything in the industry. You remove fragmentation.
Right.
Does that?
Henry, you had a question? Yes, absolutely agreed. And reciprocity is, we can't just it has to be reasonable and fair for everyone, right? No matter what size you are. And I think that meets everybody's goals, hopefully. Bhupinder, you have a question?
Hey, Cindy. Actually, I just wanted to add two points, which I think Brendan likely touched. Incentivizing the industry or the people who are exposing data. My 2 cents is actually, Brendan is very right in spotting that when the API structure or API were defined, they were very much, let's just say, open data, but the business use case was missing. I mean, of course, we understand the value of sharing data for sure, but I think incentivizing banks were very essential so that the money can be invested in the other sectors like, education and promotion. So the 2 use cases which I thought could have been beneficial because the way that APIs work, one is, which I would think again, which is very closely related to my field, age verification. Are you over 18? It's the simplest API possible because banks would have done KYC. They hold almost most trusted data after the government, right? So that is one. The second could be, which is a little bit more complicated, probably the address verification or providing your address to a trusted third party. So with these 2 simple APIs, which may not fall under the open banking or financial data exchange, they fall under identity, identity verification. If such a thought process could have gone into when we did the use cases, maybe there was an explicit case that banks can monetize this on the same framework, same structure, and then they can add some value, have ROI on their investment. So that's what I always thought, that there was always a missing business case for the banks. Of course, it's a regulatory initiative, project or implementation in UK, but there was always a case of, making a slight adjustment. So that's the only thing which I wanted to, highlight.
I couldn't agree with you more, Bhupinder, and I think you could, argue that there's other use cases that sit alongside that. When you look at the due diligence of KYC that banks go through.
Absolutely. Yeah.
They've got the most trusted data sets probably of any organization, maybe
Absolutely.
even with government.
Oh, yes. So I said, like, government, of course, we rely on the identity certificates which they provide on the documents. But I think banks definitely store more than the transactional data. I think there was, as I said, like, there's a missing use case. What about the static, verified, hardly changeable data of the person's identity, which is being held by the bank, right? Any aspects of that could have been very much exploited, and that would have intensity or, even ignited innovation even further, because now we are moving into the area of digital identity, right? Proving on the fly, not just sharing data of my transactions. Of course, payment is the best use case, I'm not denying that, but I always feel identity has been left out.
And you're supporting my argument, Bhupinder, about where countries should learn from what others have done thus far, so they don't fall down the same pitfalls, and they can learn from experience and actually accelerate their initiatives and their programs and so on. I'll move on unless anyone else has got a question. So just a couple of other countries I thought would be worth sampling. So we've had Europe, we've had the UK. Look at Brazil. I think that if you want to hold somewhere out so far that's been a success, has been amazing. So Brazil has been driven by regulation in the first instance, but the regulation brought all the stakeholders together, and then separate entities have been created to drive the open banking vision. It's probably one of the fastest implementations we've seen of central services infrastructure that took place at the height of a pandemic. So that was phenomenal in its own right. Okay, they had the major 6 banks coming together, but bringing everyone else, and they had an end game when they started. Most people had the end games open banking, but they had an open finance, open eco data system view in sight from the get-go. And this was all driven by FEBRABAN in the early days. But again, like the UK, I think the important piece here is I had central monitoring and reporting. How can you understand whether something is working or not if you do not measure it? You need to measure key performance indicators. If you can't measure them, as the EU can't do today, how do you know how successful something is? They've got, as you can see, 804 registered institutions in August 2022, but you know, it's actually over 1 billion transactions now across 19 participants. But when you take the whole of the ecosystem, it's about 2 billion transactions a month that they're now processing. They don't call it open banking anymore. It's now moved to a broader agenda, which is open finance. And they've got 5 million customers who are engaged in the ecosystem on a monthly basis. So if you compare it against UK, which I consider to be more successful than Europe, then Brazil outshines the UK in terms of its speed of adoption. And now with this open finance moving forward, even though it hasn't taken great hold yet, open insurance is the next pillar that's been launched into the economy, that benefiting consumers and society in general. I suspect open insurance is probably going to be less transactional because you don't do insurance on a daily basis. You do account and look up and you do payments and so on. But what I think will drive the Brazilian stats through the roof is when PIX becomes connected into the open finance network, and we start seeing the volume of PIX, a volume or a percentage of the volume of PIX transactions going through Open Finance Brazil. When you see how successful the PIX program has been over the last couple of years, then that is going to be a massive injection into the arm of Open Finance Brazil as they develop their ecosystem. One of the earliest ones to go also was in Australia. Again, a government-driven piece of legislation, but I think it took a much more holistic approach. Open banking is just one pillar of the Consumer Data Rights Act. It's really about open data. So a whole framework that's been put in place. Open banking itself started in November 2021, where, like in UK and Europe, it had a very narrow definition of the accounts that could be accessed. So it was really all about home and personal loans, but they then extended that out to deliver other services within the framework, including overdrafts, lines of credit, foreign currency, business finance, and so on. So like PSD2, but became much broader in its adoption than in Europe. But they also looking to open up to bring in other vertical markets, such as, what are we talking about? Telecoms, pensions, insurance, and so on. But it has its issues, there's no doubt about it. Has Australia been successful thus far? Well, it's got a population of 25.5 million. They're only processed 254 million transactions since December 2021. Not exactly a high volume of transactions, which shows even though it's got a smaller population than the UK, for example, it's really not, I would argue, engaging with the consumers in the market. And there's a lot of evidence showing that people are talking again about education to educate consumers to the benefits of what an open data ecosystem can deliver to consumers and businesses alike. So there's 4 examples there. Have they been successful? Are they not successful? I would contest that Rome was never built in a day, and we are at the start of a journey. If we look at all things financial, when they're launched, they take time to embed, get accepted, mature. So we start seeing good usage of channels and so on. I think that's true of any payment channel in the market. But I think you have to be careful what you wish for in some respects, because the regulation can actually stifle innovation. And that's why, as an individual, I'm very much an advocate of regulation being light touch instead of being heavy and hard. And I'm a great advocate of a scheme-based approach as well, because I like to see everybody play by the same set of rules, understanding exactly how they're going to develop for that ecosystem, and also know what the consumer benefits are at the end of the day.
So Brendan, on that perspective, on your position, which sounds very reasonable from everything you've presented to us today, we turn it to Canada for just a minute. You know, our advisory committee, or the Department of Finance's committee for open banking, their paper lended itself to suggest that Canada may be going towards a hybrid model of open banking, as opposed to a regulatory driven, centralized driven, model of open banking where the government comes up with rules. And on the one hand of the scale, and the other side of the end of the scale would be market driven and entirely market led open banking ecosystem. And we're thinking of a hybrid. Is that similar to what you're describing, of a regulatory and a scheme-based approach?
So to me, a regulatory approach is where the government's involved full stop, and they're writing the rules and everything. And I do not advocate that. What I advocate is having a central entity, owned, maybe it's owned by all the participants, maybe it's owned by, but just an entity that people can become a part of, can apply to enter. Maybe the permission for entry is being a regulated entity in your own right. So you've got the regulatory piece there, with a set of rules and schemes, and by taking a scheme approach, you can adopt a market-driven approach, because the scheme can work with its members, whether they be data service providers, whether they be data recipients, whether they be technology companies, whomever they may be, to understand what market demand is, and to then ensure that the standards are developed and flourished in support of what the market requires. If I look at United States, FDX has done a lot of that, but in a very unregulated way. Look at the number of endpoints, and they've got 600 data items or something that you can collect via the API. That's where they've moved to make it the broadest opportunity of service provision that can be provided. So I think regulation, yes, but light touch. I call it a scheme. Maybe I'm calling it the wrong thing, but something there that everyone could coalesce around.
Right. Okay. Thank you. That's very helpful.
That's a pleasure. That's a pleasure. Can we pop on to the next slide? Thank you. So here's the opposite of what I've just been talking about. United States. Yeah, it's complete diametric opposed to everything I talked about. Yet open banking has been more commonplace in the United States than it has for any other country in the world. But it's open banking under a different guise, because obviously open banking has been driven in the United States, and some very big companies that provide these services in the US today, but it's all been done with credential sharing. So it's been screen scraping, and of course we all know the issues around screen scraping, not knowing who's coming in, not knowing what they're doing, and so on. So is it really open banking? I would contest it's not really open banking, because without regulation, it's clusters of banks and service providers coming together. So unless you bank with that bank, or you're with that service provider, you can't actually access those services. Also, actually look at the demographics in the United States, not dissimilar to Canada. Most populations live on the coasts. What about if you live in the middle of the country, where there's many, many fewer people, and bank branches, franchises are not so prevalent? You don't have access to those services. So it's not truly open banking on a societal level, or open finance on a societal level, that we envisage, with hopefully regulation driving it through. But it's been successful thus far to a degree. 42 million US consumers using the APIs for data sharing. That was published. They published that figure in October 2022. So that's roughly 39% of the US bank population. So there's a good degree of success there. But I think, importantly, we had the presidential executive order that was announced by President Biden, looking to promote competition in the American economy. And now we've got I can never get this right, Consumer Protection Retail Board, I think that's right, who are now looking at legislation to be drafted and published into the US market, allegedly by the end of Q1 of this year, which will start moving them towards a more structured, potentially regulated environment. I am not so stupid to believe that it will be a smooth journey. Too many stakeholders in the value chain in the United States. So it would probably be quite a while before it moves, but the vision is there and the desire is there, but politically, whether it actually manifests itself, I think, is probably going to be a different question altogether.
Pinder's hands up. Sorry, Brendan.
Please.
Keep interrupting.
No.
Sorry. I just want to add like one point. I think when Brendan mentioned, the government has to play the role in the light touch, I still believe it's not that light touch, because they need to define the citizen data rights, right? I mean, I think we are one point which we obviously miss is in UK, Europe, we have GDPR, which governs the essential of data holding. Australia has developed the CDR, common data rights, and there is other things which are the duty of the government, right? So in the same perspective, I wonder how America will operate. Would they have federal, or they have state legislation? Again, I'm outsider. I'm just debating who will set the the data right for these schemes, or open banking or open finance. So in my opinion, the government has to do what is the very essential part, which is like setting the how to handle the data, irrespective of what kind of data and how do you process. That's just my 2 cents.
I totally agree, Binder, and I also think that no matter what gets published, there are so many stakeholders with diametric opinions in the United States that you will never satisfy everybody. And any proposed legislation that gets published will then have an uphill fight to get itself through the various houses before it could be enacted at a federal level. Then you have to understand what's going to happen at a state level, because of the way that the politics run within the United States. So yes, I agree. Could we go to the next slide, please? Thank you. So this slide, I really just want to talk about what conclusions can be drawn from the various implementations. And this is from, obviously, a consensus perspective and where we come from, and our thoughts and our beliefs in what make a successful open ecosystem. And I've said, I think regulation should be the foundation stone, basically, but not the driver. I very much see, and we are launching a number of schemes in countries in the next weeks, which will become public, but I'm not able to talk about them now, whereby the scheme-based approach is the preferred model. So we're seeing central banks and regulators starting the conversation and the journey, but then an independent entity taking over then as a scheme owner. And they are publishing, for example, the governance of the scheme, the rules. They're publishing standards that everyone could adhere to. They're putting in the customer experience guidelines that everyone can work to. They're putting in dispute management, some of the more basic stuff. And there's value in having a scheme entity who I truly believe can oversee the overall ecosystem. How can you tell the health of something if you can't measure and manage it? If you set KPIs as to what defines success, unless you can monitor that environment, you never know whether it has been a success. And one of my worries is that certain implementations of open banking may produce white elephants, i.e. a lot of investment, but for very, very little return and so on. I mentioned on a number of occasions, say again, we need to ensure that all players in the ecosystem are incentivized. You want people to invest. Open banking is the start of a journey right the way through to open data ecosystems, and we want all participants to invest. Okay, we want a central level playing field that obviously incents all participants, making sure that requirements aren't more onerous on one actor or group of actors than others, and so on. And I've said education, education, education. Do not believe consumers will just use if you launch. They have to be given the confidence to engage with those services. And that to me is a key factor. And if you look at the countries around the world that are implementing, I think there's key learnings for each individual one that any country that's starting this journey can look at and pick the best bits from and take advantage of and learn the pitfalls to ensure that they don't face the same. And if they do that, then I think they can expedite their programs into the countries quickly, efficiently, and most cost effectively. And you can always benefit from lessons learned. There's no doubt about it. Always know who your target audience is that you're going to be selling the services to. Make sure you educate them, and you don't end up building a white elephant. Next slide, please. Thank you. So this, people talk about open banking, and when I look at Europe, banks implemented APIs. There was little more than they did than that. And obviously the orchestration layer that sits behind it. But if you're going to build an open ecosystem, you need to have a framework. And there are definitive steps that one needs to go through. And central banks who are starting to drive these agendas initially, they're bringing all the stakeholders together. And to me, a successful ecosystem will be driven by stakeholder engagement at the earliest opportune moment. And stakeholder engagement doesn't just mean banks, it means everyone in the ecosystem. And working together, they can then build the business requirements for the environment. They can work to define the models, blueprinting the architecture, the ecosystem, the definition of standards, and then look to go into building phases so they can test, go to market, sandboxes for dummy test data and so on to prove cases board as they go through, and then implement and monitor over the long term. Every payment system is monitored. Everyone knows what transactions go through them. Why would it be any different from an open banking ecosystem perspective? Next slide, please.
Brendan, before you move on from this slide, sorry, this something that's been coming up. Can we go backwards? Part of this framework, and this is a very, very helpful, illustration of the milestones that Canadians can keep in mind when they're thinking about what might look like for Canada and a successful framework. But I'm wondering, I don't see anything in here about something that folks have been talking about a lot, which is where liability and risk, how that's allocated. Is that something that other countries and jurisdictions have thought about in their systems?
Very much so, very, very much so. So within Europe, the liability is defined within PSD2, which is the payment services, services directive 2. Now, Bhupinder is as familiar with PSD2 as I am, and I think he will agree with me. It's as clear as mud. And banks have the opportunity will take the position of saying, if a consumer's agreed this, it's not my responsibility, and that's just not true. Okay, so this is why I favour the scheme type approach, because within the scheme rules, you will define the liabilities that are on each party, given scenarios, and who is the one that should be remediating them, who is the one that should be compensating in need of a claim of compensation. That to me isn't a regulatory issue. That is a scheme-based issue that all people coming together collectively agree when they join the scheme, and there's openness, there's transparency.
They're similar, a parallel that keeps coming to my mind in Canada when you talk about a scheme is Payments Canada, because they own and operate our rails, and they're not our central government per se, but they have a ton of rules about chargebacks and, fraudulent wires and things like that. And outside of that, as a lawyer, we litigate, maybe more regular than we should, or I don't know the statistics, but we litigate when things do really go wrong, cybersecurity, whatever breaches or fraud, mass fraud, Ponzi's. And among the FIs and service providers, we look at our agreements and we determine, common law. We've got plenty of tools to figure out where liability sits. But I think primarily and particularly from our recent changes in the Bank Act and our federal consumer protection framework under the Bank Act, I think a lot of the sentiment and the principle that it is not the consumer who provided you consent's fault, is they should be made whole, and then we sort out the rest. That's
Right.
been codified in different ways now.
Yeah, totally agree with you. Totally agree. And why wouldn't pay? When you say to me, who would run the scheme? Why would it not be, for example, someone such as Payments Canada, who has that experience to date in doing what I've just been articulating for other payment channels, ACH and all these other things? Yeah, because that's what those guys do today. And they're not the government, but they are overseen by the government. So they are sort of regulated in that respect.
Mm-hmm.
But, you can't go and be, excuse my ignorance if I get this one wrong, but I'm assuming I can't just rock up to Payments Canada and become a member. I have to either be regulated or something. So there is criteria for entry, even into the program, just to get
very high criteria right now. Some would say too high.
Well, again, that's different. That's a different argument. I agree. And when you get into open banking, open finance, open data, you've got to be able to define who your participants are in the ecosystem. One of the biggest issues in Europe is actually we've got loads of people now using data who aren't even regulated because they're fourth parties. So they've attached to third parties who can get the data and then sell it onto
Fourth parties. Okay.
Yeah, for fifth parties. So the regulatory umbrella is not wide enough. And always be, again, be aware of unintended consequences that regulation delivers. That's why I go for the light touch, and you let the schemes then dictate, because everybody is a collective and part of the scheme and agrees to the rules of the scheme.
That's great. Upinder, you had a point to add?
Actually, I have a question to add, probably because I know Konsentus framework and I've worked with them, so I understand. I think, Brendan, it's to me, it's very obvious, the liability part, which you, briefly alluded. Director companies like yours actually help to some extent to alleviate that risk. Maybe if you just want to give a little bit about how Konsentus, allow verification and how it is related to liability, that'd be interesting to hear from you.
Yeah, certainly. And actually, you don't know this piece, Bhupinder. So when we develop solutions for Europe, it's very different because all banks have to implement their own, let's call it, trust frameworks. However, that's because there were 30 countries all under one piece of legislation with no central entity monitoring what's going on. But if you have a central entity that manages a whole ecosystem, you can have a central directory service, secure directory service, whereby all participants who are regulated to operate within the ecosystem are registered on the central directory, all information about them and so on. They are delivered digital credentials, which then allows them to securely interact within the ecosystem with other counterparties. And when those other counterparties receive requests, so that they can go to the directory, they can see who that entity, their true identity, they can see what they have permission to deliver and so on. And as Konsentus, that's what we deliver. We're a technology company, but technology is a means to an end, hence why talk about regulation, legislation, and how people do things. Because at the end of the day, we're sort of those rails that sit underground, a bit like the pipes that go underneath us that take water and electricity and utilities.
But essential. Not
I
but
like to think so.
essential.
That's we are practitioners in this space. We are a group of people who are not only passionate, but understand exactly the requirements in this market space. We've worked with central banks in 14 countries, regulators. That's outside of Europe, by the way. Our brand, Open Banking Exchange, worked with all the regulators in Europe, as well as the ECB, European Banking Authority. So we understand policy making, we understand regulation as it gets drafted, then we can see how that is implemented at a country level to drive success and so on. So that's where we come from. That's our DNA, and I must say I personally find it very exciting. So let me just finish up, if I may. You know, from my perspective, we talk about open banking, but that's just the start of a journey. You know, open banking is a bit old school these days. Everyone's now talking about open finance, but ultimately the vision is to move to an open data economy whereby many other verticals come in and consumers can safely, confidently share their information for the purposes for which they've given consent and so on. I'd argue there's a number of fundamental prerequisites to a successful open ecosystem. I'm repeating myself from what I've said, but you need the vision. I think you need regulation as baseline, a light touch. You need an entity that's going to, you know, write the rules, standards, operation manuals, conformance, and all of that, and so on. And don't be fooled by implementing one-sided models. There needs to be the right remuneration models in place to ensure that every participant in the ecosystem is incentivized to invest and to innovate. Okay, at a moment where banks just have to give data, that is actually a complete de-incentive and drives them to do nothing. Okay. And then you've got to have a reporting entity of some shape or nature. If you want to know how well the system's doing, volume of transactions, API availability, number of customers engaged in the ecosystem, types of services that are being delivered, unless something's overseeing that and monitoring that, then you're never going to be able to know how well it's done and whether it's been a success or not, and whether it's met the aspirational requirements of policymakers, or indeed the key performance indicators, which I think that was the last slide. So if you could go to the next, it's a big thank you from me.
Thank you. You have a number of questions in the chat, Brendan, that have accumulated. Bhupinder, I will leave it to you as I do have to jump off to a regulatory call. Brendan, it's been a pleasure, and I look forward to our future run-ins.
Look forward to it, Cindy. Been a pleasure. So shall I just sort of talk these answers through then that have come up in the chat?
Absolutely, Brendan. Take a pick. You know, we can scroll through it, and we do have some other questions. If we manage to finish in the chat, then we can take some previously asked questions from our members.
Okay. Well, I can see a lady by the name of Shell Windsor who I think is agreeing with me on many different fronts. Which, if I'm right, that's very good. Was there a lead assigned to the UK similar to what Canada has done? So in the United Kingdom, the Open Banking Implementation Entity, which is the entity we're talking about here, yes, it actually had a trustee, and still does have a trustee. It's obviously the fourth one now, who is the, for want of a better term, CEO, MD of Open Banking Implementation Entity in the UK, which writes the rules, specifications, and everything else. So I'm not sure how many people it employs today, but it is a body and it has a legal responsibility to the UK Treasury at this moment in time, but that will probably change to the Financial Conduct Authority at some point during a transition period later this year. So there was a lead. I think that's it, isn't it, Bhupinder? I can't see anything else on there, or am I missing something?
I think that's the question. I think, Brendan, maybe we can just go to the topic of fraud mitigation, how regulatory technology cut the fraud and risk. You know, at the end of the day, I think consumer trust can be only won if we make sure that essential gateways or technology and auditing, and I think you mentioned two KPIs. So how do you see the comparison of various markets if they have done justice to these criteria, whether it's UK, Europe, or even Middle East? How does Konsentus see on these questions to fix them?
So I think you can break fraud down into two different discrete pillars in what you've just asked, Bhupinder. One is where we operate, and the other, I would argue, is only when you can see a collection of everyone's data. So let me start with the first point, if I may. So obviously, as the ecosystem grows, there will be fraudulent third-party providers who will be trying to access data within the ecosystem. Let's be fair, consumers, when they sign up to services, do not go and check to find out if a company is legitimate, if it has credibility, the credentials, or so on. So consumers will sign up to services willy-nilly, and be fair, we've all done that at some point in our lives. And the onus is on the banks, the data providers then, to ensure that only legitimate regulated third-party providers can indeed access the accounts. And that's where we operate at a base level as Konsentus. And that's one element. So a bank will know, using regulatory services, whether the third party, well, who the third party actually is, their digital identity is verified. And then once that's been verified, the bank will know exactly what services that organization is allowed to deliver with the consumer's consent. So that's the first part. The second part is much more to do with standards, which is to do with consent management. And we've got international standards, OAuth 2.0 out there. We've got FAPI, OID, and so on, which should deal with all the consumer consent flows. So I know a third party is legitimate, then the bank can go through the authentication then of the consumer to ensure that they indeed are who they say they are at the start of a journey, whether that's to give consent to access accounts over a period of time, whether that's initiation of a payment transaction or recurring transactions, or whatever it may be. That's one aspect and one element. The other element, I think, is where you start to see fraud enter the ecosystem, either through APP scams or things like that, which are not going to be obvious at a technology layer level. And it's only through seeing the collection of data of all the transactions that are going on and people reporting, where you start to identify themes and trends within the industry that are affecting the market. And then again, this is why I think a scheme-based approach has a lot of advantages, because if you can see those themes, trends, and themes appear, you can then act as an industry to counter that, to fight that fraud as it comes into the channel.
Absolutely. Thanks, Brendan. Richard, can we move to the slide which has questions which we asked? So Brendan, these are the questions which our members have asked, and we have collated, and we like to go through them. And I will also ask the floor and the participant, if they have any question, either they can raise the hand or they can put the question in the chat window. So please feel free to interrupt, and let's take the next 20-25 minutes as interactive as possible. So Brendan, the question what we have from our members is, what are some of the key drivers of success for open banking? I think you alluded to that.
Gone through that one.
Yeah, I realize that, but I think the KPIs and the audit, and I think you mentioned the scheme-based approach. So I think we have very much covered that.
Bhupinder, you didn't mention education, and I'm sorry, but I've always
been education is, yes, yeah. So moving on, do you think that drivers of success? Oh yeah, I think this might be interesting. So Brendan, I think the question is, given that Canada has, I think we all agree that it's a bit late to the game, but what could be the success factors for, will they be different, or do you see that they can, almost replicate other jurisdictions? So how do you see this, for Canada unfolding?
Well, let me just say, I would hope Canada would not be so short-sighted to replicate what others have done, because that means Canada's not learned lessons from what I've just talked about. I think there are great things that can be pulled from the different countries that have implemented thus far that Canada could take advantage of as best practice. I think there's things that have been done that are definitely not best practice that Canada could then look to mitigate against and find other ways, options and so on. I don't think personally the drivers for success of open banking in Canada should be any different from any other country that's implementing open services. I think what Canada has to do as a nation is decide what does success look like? What is the ultimate objective that's trying to be achieved? And then that's from a policy perspective. And then look to see what regulation needs to support the policy. And once you've got the regulation and policy in place, you can then look to say, right, how best to implement. So, you need to blueprint the architecture through. You need to understand who the actors are. You need to bring all stakeholders together to coalesce, to understand everybody's view, because it's not just about the banks. It's not just about the third-party providers. I'm sure, as in the UK, Canada has probably got some pretty powerful consumer groups who would be thinking about, society. What about those people who are marginalised, who don't have access to services and so on? So all of that needs to be thought through. It's a melting pot. And I think the ultimate objectives and outcomes, once they're decided, then puts you on the path to success for open banking.
Thanks. I think that the next question is pretty related to the previous one. It just broadened the scope of the delivery or the area of impact, right? It's talk about to the open finance. Given that UK has already started looking into it, right? I think we all are, at least I'm aware, and I'm sure you are aware that there is a consultation going on. So what do you think about the success will look like in Canada and UK? Is it based on the structure the governments or regulator have taken, or is it going to be based on the consumer demographics? So how do you see the success would be for open finance in the markets?
So I think the success for open finance is ensuring that all the relevant, let's call them vertical pillars in the industry come to the table and are incentivized to join in the open finance scheme. Now, is open finance one great big umbrella catching all? Or is it more along, for example, the European lines of open finance, where actually there's a number of different pillars for open finance? So one's to do with pensions, one's to do with investment, one's to do with their own set of regulation. Now, I'm not quite sure that's a recipe for success. I would contest, Bhupinder, and argue yet again, make it light touch on the regulatory front, drive from a scheme-based approach. Citizens should have the right to be able to access their data through data providers, whether it's a bank, telco, pension house, whomever, and should be able to share that data in a secure manner with regulated third parties who can deliver them better financial outcomes than they're currently getting today. If you can get to that point, then not only are the consumers benefiting, but so society in general. And in other countries, for example, where you've got huge unbanked populations, then there's the opportunity to drive towards financial inclusion.
Thanks, Brendan. I think that is very much, the case. I think if the regulation is light touch, then surely I think the benefits of success, or actually success, can be achieved in a different ways. The next question which we have, I think, which you would have seen a lot, or experienced a lot, working with various regulators and the government bodies. So what are the challenges which you have, observed or solved from going to open banking or open finance inside UK?
What are the challenges? The challenges that I'd argue it's been driven by regulation. So regulation takes time to lay down, enact.
Right.
And it shouldn't be driven at a regulatory level. I think it should be driven at a market level, scheme-based level, and so on. So, let's be fair. I think normal market dynamics are playing out here. UK and Europe were the first to implement secure open banking infrastructure. We've got ourselves, to a degree, bogged down, and we're finding it hard to step through the mire. And we're seeing other countries now adopting straight at the open finance level. They've taken the learnings from the UK and Europe, and they've been able to build upon those to get to the next level of ecosystem development. I think UK and Europe are being challenged by regulation, and time will tell. I don't have a crystal ball. I've got no idea. I really don't. At the moment, I would say there is a lack of clarity as to what open finance will look like in the UK, and also the speed that it will be implemented.
Okay.
But there's demand for it. I think that's the main thing.
No, I think there is a definitely demand, I think, Brendan. But yeah, I think the way the challenge is for the regulators, and I think they probably are, as you said, is similar to the first use case probably. But then you have a bit of a foundation to, move from one pillar to another pillar, which is the industry verticals, as you said, in the open finance. Okay, the next question which we have, I think is pretty interesting. So it says, like, do you think there is some of the ecosystem player will have easier time implementing the driver for success in open banking or finance? Or do you see that they could be almost, similar? How do you reckon, and how's your experience working with some of the players in UK, Europe?
So let's take two examples, Europe and the United Kingdom. So I would say that in the United Kingdom, it was easier for people to implement for open banking because there was a UK-based specifications published that all people could work towards adherence for and could then test prior to bringing to market. In Europe, because of the fragmentation that was brought around through simply being regulation, there was a whole host of different open banking, for example, API specifications that were published. All of them comply.
Right.
And banks could choose whether they wanted to implement those specifications or even design their own specification. The regulation just said you have to provide an open banking API. Didn't say it had to be a certain structure or anything like that. So you can imagine the third-party community significantly struggled in early days, because if they wanted to attach to multiple financial institutions, it typically meant they had to do single integrations to each financial institution. Whereas in the UK, because it was a standardized API specification, they didn't have those challenges. And in the UK, they could do conformance testing prior to integration as well, so they knew everything worked. So Europe now is very fragmented on this front, to the point where the current review of PSD2, the European Banking Authority that's just inputted into the EU Commission, has actually suggested maybe there should be a single standardized open API specification for Europe, and it would remove complexity. We've got a group of actors in Europe called API aggregators.
Right.
And these are guys that sit between the third-party provider and the financial institution. And no one had really heard of them before PSD2, but their business is to reduce the complexity for third-party providers.
Right.
So what the aggregators do is they connect to all the different banks and they do all the one-to-one integrations with the banks. And then a third-party provider can connect to the data aggregator just once, one integration, and then gain access to all those banks. So actually, the regulation has spurned a new part of the industry that was never actually envisaged in the first instance. And, for people on this call, they may have heard of organizations such as Tink, which is one of the big players in Europe. Obviously, there's Plaid, who's an American company, but now coming to Europe and so on. But there's a number of aggregators in each individual country. So definitely the European model made it much harder and more difficult than a more standardized approach, which was adopted in the United Kingdom and is one that I advocate being scheme-based.
No, absolutely. I think, Brenda, that's a very insightful information you provided. Like ECB is now thinking to standardize, and I think I also agree with that. If open banking or open finance has to be successful regionally, right? Let's just not say globally, global interoperability. There has to be a definition of standard, right? I think in earlier days, there was a debate about it should be a ISO standard, World Trade Organization, a WTO standard. There were a lot of discussions around that. So do you reckon that the current ECB decision is on those lines, that they're saying, let's have a single API standard, as you alluded? Because I'm also well aware that Polish have their own standards, Switzerland developed their own, a couple of other countries also develop their own standards. So is that what's now going to happen with the ECB direction on having a unified API standard?
So the Polish API standard was a really good one because that was written by banks, and the whole point of that was you don't let a third party get anywhere near data. So that one has not been adopted by many people, thankfully. The ECB, I think, will probably follow. Well, it's not going to be the ECB, it'll be the EU Commission, because ultimately it's laid down at the Commission level by FSMA, which is the Market Stability Group. They want an EU-wide, I think, API spec. That's where they're going. Now, could you make that a global API specification? Well, that's what SWIFT has been trying to do. So you've got organizations out there already who are thinking, how can I drive this on a global, international standards operable basis? I'm not sure a global standard is a realistic vision. I think that, I don't think central banks or regulators would be particularly comfortable outside of Europe to see their data going offshore into other jurisdictions and domains, which they have no legal right over to regulate or manage and so on. So you may get coalitions coming together. So, if we go to, you mentioned Middle East a minute ago, Middle East, you've got the GCC states. You could see how they could coalesce together to have a single standard across every GCC state, about 8 or 9 of them in total. But I think it's going to be a regional level, not necessarily a global level.
No, I think that's very much the possibility. I think I understand that international standard has largely been impossible to achieve, I think, in quite a number of areas. So open banking would not be a different use case, as you said. Okay. The next 2 questions we have is, okay, I think we briefly alluded to this one. It's about challenges an organization face implementing the banking, which probably is very subjective to, I think, an organization. But I would like to hear, have you worked with an organization where you have seen different challenges or success factors in terms of their implementation?
Well, I think I've probably covered this off already, Papinder, talking through the slides. I'm in danger of repeating myself and probably boring everyone who's listening on this call. But, the challenges are, if you have fragmentation in the market, if you don't have standards that everyone follows, then inherently you are driving challenge at an implementation level, at a cost level, at a maintenance level. To me, the biggest challenge for open banking is all about engaging with consumers, having them come use those services. Technology, the rails are irrelevant at the end of the day. If consumers aren't using the services, then there's no point in building them. And, open banking means nothing to the man in the street. And there's no reason why it should mean anything to the man in the street. What should mean something to the man in the street is the development of an open ecosystem whereby they can feel confident that either paying in that environment or allowing people to access their data in that environment, they have control, they consent for it to be done, and it's going to be done in a way where their data is preserved, maintained, secure, all of that. Rome wasn't built in a day. These ecosystems are going to exist long before I popped off this mortal coil. But that's the whole point of it. We're not just doing a short-term patch fix solution here. We're trying to implement long-term architectures that deliver societal benefit.
Absolutely. I think I will just extend your analogy of the street. You are absolutely, I think, spot on that consumer don't need to be educated about the street of mobile banking. It's about the shops on that street, right? Every shop which is being fed by the data of that, mobile banking streams. That's what consumers are interested in, whether they are aggregators, personal finance manager application, investment banking, investment opportunities based on the consumer data. I think that's what the consumers are interested about. And I think that will obviously resonate with you, that it's about the product and services, not the rails. Okay.
Bhupinder, the consumer wants to know what's in it for me. How do I benefit? How does it deliver me value? How does it help me?
Absolutely. Brenda, we are coming to our last question. I think it's an interesting one. So the question is, can any jurisdiction launch open banking without statutory consumer data right?
Arguably, no. Within Europe, we've got data rights which are enshrined in GDPR. To a degree, that's conflicted with PSD2, but that needs to be ironed out. But no, I think you do need consumer data rights. You need to have a baseline regulatory level whereby everyone is confident in understanding about how, if their data is stored, if their data is shared, how that's handled, how that's managed, who's the data processor, and so on. And also, have they got a right to anonymity? So if I want my data removed, how do I go about asking for that data to be removed?
So I think the consumer data rights, or the rail card which is provided by the government, is the backbone. It is kind of indivisible, but everything is hanging on top of it. And I think that's very much essential, as you said, So I probably concur with you. But the data right has to become from the government or the regulatory bodies to, safeguard. With that, I think we have come to the end of our questions. So we are 5 minutes to the end. If anybody has any questions, please feel free to chime in. Otherwise, we will conclude the session. A brilliant presentation from Konsentus, Brendan, and we got some insights, into the global markets and how Konsentus has solved some of the regulatory problems. I will wait for a minute before closing the call, giving participants an opportunity to question. Okay, I think
if anybody has any further questions, I'm always available at konsentus.com. Please drop us a line, drop us a question. Be very happy to engage and share our views and thoughts with people.
Thanks, Brandon. So thanks, folks. Thanks for attending the session. It was again, a delightful and insightful session we bring along. So this time, Konsentus has lent us the global lens on what they have seen, what they solve. And with that, it's over and out from Open Finance Network Canada. Till we meet next time. Thank you, everyone. Thank you for participation.
Bye-bye.
Bye.